Hey guys, welcome to another video. So for this week, what I'd like to do is I'd like to quickly walk you through some of the updates that we have over here. Right, if you're new, what we usually do on a weekly basis is we share with you some of the trades, insights that we are looking at, and hopefully through this educational part of video, you'll be able to pick up some things and apply on your own trading analysis as well. Right, and for those who have been following us for some time, thank you for the support. Do always give us feedback and some of the things that you like us to share more with you. All right, because honestly, we wouldn't know what will be helpful and beneficial to you as well. All right, so just keep the suggestions and feedback coming. All right. So for today, what I'd like to walk you through first is once again, right, we launched our 4 Pillars mentorship program last month, early May, right, and right now we are again open up for registration. The thing that we'd like to share with you is that we are very selective of the students, right, simply because we believe that not everyone is ready and committed in their own learning and development as a trader. So what we want to do is definitely we want to help you to become a consistently profitable trader, but we believe that as coach and trainers, right, the students have to be prepared to be coached and trained as well. All right, so we are very selective in it, and if you are serious and interested to be part of this community, all right, to learn and trade together, do schedule a meeting with us, and we'll see if you fit into the requirement. Right, if you're interested, simply click on the find out more button over here. And what we'd like to share with you is also moving on, starting this week. Actually, we started last week, alright, but moving on, what we'd like to do is we'll have this lunchtime market analysis series. Basically, what we'll do is every week, hopefully, currently we are doing on a Wednesday, alright, this coming one is 25th of May, but hopefully we can push it back to Tuesday, alright, earlier of the week itself. The whole intention of this is to share with you some of the setups that we are trading, right, and hopefully you'll be able to benefit together trading these trades with us. Alright, so I'm sorry for overseas readers and subscribers as well as traders, because this is only applicable to Singapore. What we are having is a physical meetup, right, and we are currently for this event we are in partnership with CMC Markets. Okay, so the next session that we're having is actually this Wednesday, 25th of May. It will be during lunch period, 12:30 to 2 p.m. Alright, so what you need to do is RSVP. Alright, the link is over here. You can click onto this button, RSVP on it, because what you need to do is we'll then eventually send you a complimentary ebook, alright, for those who RSVP and attended the event itself. The next thing I'd like to announce to everyone is that one of our account, right, the FXP trading account, we are close to a full 12-month cycle, basically a year period. Alright, and moving forward, we are assessing, whether the brokers that we are using are up to our standard, and we decided to close this account. Basically, the service isn't up to what we have expected, and what we'll be doing is we'll be transferring the funds to another account and continue to track, alright, and share our performance publicly with you guys. So what you need to do if you are following us on that account, alright, what you need to do is currently we have a new account set up, alright. The name of this account is FXP Manage, and this account definitely, in terms of historical stats, is not as comprehensive as the previous one, because this one we started this year since January, so up to date is about 5 months only. Alright, so take note of this. So let's go into this week analysis. The first thing we like to look at is the volatility index. Currently, it's still trading below the market risk level. This simply signifies that the uncertainty level in the market is still pretty low, and what we like to term is called a risk-on environment. Alright, but this is a very surface level of identifying whether it's risk-on or risk-off. So right now, because the VIX itself is below 20, surface level, what we are looking for is a risk-on environment. Right, and what we go into more in-depth analysis is looking at the equities market. Right, S&P 500 is still showing strength. Alright, it tested the supply demand some weeks ago and rejected off it, but currently is being supported by the weekly support around the 2040 level. So what we expect is that as long as this level holds, we do expect further upside potential. And if this level is broken, the next support level to look out for is the 1994. Right, if this level is broken, we might see a transition into a downtrend, right? But as of now, what price is showing, we are still in an uptrend momentum. For the DAX itself, we are still bullish on this particular index, right? The key level, or I would put it, the confluence ratio levels, right? You can see there's tons of ratios confluence over here, right? It's around the 10,800 level, all right? If you are looking into buying this trade, this pair, right, the German DAX, do take note of this level over here, right? You might want to take your profits off the table when price eventually reach this, right? As of now, we are still, our bias is still to the upside. For Hang Seng, right, we see a completed divergence, alright. Price broke the neckline, alright, went up, and it retraced back to its previous support with a Fibonacci of 50% retracement level. Alright, and we do see some nice support over here. Alright, so as long as price respect this area, we do expect that price continue on the upward momentum. Alright, so having said that, all the equities market is currently facing a retracement. And as long as they continue their upward movement, we are still in a risk-on environment. Going on into the commodities market, alright, the first one we'd like to look out for is the gold market. Okay, we have a very huge divergence happening right now, and previous supply zone is still valid. Alright, price rejected off that level. What we want to see is a healthy retracement back to its previous weekly support level at the 1200 level, and as long as price respect this together with the 1190s level, we do expect a further upside on the gold market. Alright, on the silver, slightly more interesting is because price is currently has retraced, alright, and is currently testing the demand level around the 1640 as well as the 16 even handle. Okay, as long as this demand zone is being respected, we do expect price of silver to continue rallying. For oil itself, alright, there's no retracement, but price continues to rally higher. The key level to watch is, of course, the $51 per barrel. Alright, that's confluence with not only the Fibonacci but also the previous supply zone. Okay, so if you are still holding on to buy oil, you might want to take some profits when price reach the 51 even handle, alright, or even the 50. That's a very strong psychological level, so you might want to take note of these levels. Alright, so that's for commodities. Let's look at the dollar. Alright, last week FOMC meeting minutes is pretty hawkish, and that revived the expectation of a June interest rate hike, and you can see the dollar index rally after that. Alright, and right now it's testing at the immediate weekly resistance level of the 95.30. Alright, a very nice rejection of the demand zone. The next resistance level will be at the 96.30. Alright, we do expect that because of the hawkish meeting minutes, alright, we do expect dollar index to continue rallying, right? As long as this 96.30 hasn't been breached, we do still see a long-term downtrend on the dollar. But who knows? June is near, so if the FOMC and the Fed decide to just increase or raise their interest rate, right, we might see some bullishness coming in towards the dollar again. Alright, but as for now, look out for the level of 96.30. Right, inversely on the euro dollar, we do see price falling towards the support level. Alright, at the 11th 1.1155 levels. As long as this is being supported, euro dollar is overall still an uptrend. Okay, but because of the bullishness in terms of dollar, we are pretty cautious trading into buying the euro dollar. So having said that, let me share with you the three setups going into this week. Right, Euro dollar, right? We are still riding on the bullish trend on dollar. Sentiment is still bullish simply because of FOMC coming in. Last week CPI data for the US is also positive. So we are still more towards favoring into buying the dollar. So as long as euro dollar retrace back to the 61.8 retracement Fibonacci retracement level in confluence with previous support and resistance, all right, we'll be looking for shorting opportunities. So our entry price will be at the 1.1285. All right, stop loss is just slightly above the 1300s level, and TP will be at the previous low of 1.1180. The next pair we'd like to look out for is the Australian Canadian. Alright, this is an advanced price pattern. Overall, right, the trend has been falling. What's price doing over here is basically consolidating. Okay, and we do have a valid advanced pattern setting up, completing around the 95.20, and we do see some confluence of structural in the past as well. Okay, so entry will be at 95.20, stop loss will be just above the previous high here, which is 95.55. Take profit will be using Fibonacci, and the level that we're looking for is 94.60. Right, this is a bearish godly pattern. And for gold, alright, if you zoom and look back, alright, what's happening is price has been inching higher, right, but not a very nice trend. It's basically up and down, right, but overall it's still moving higher, and what we are looking out for is we do have a potential bad pattern setting up, and our interested level would be at the 88.6 retracement, Fibonacci retracement level, and in terms of price level, it's at the 1236. Okay, stop loss will be at the previous low, which is at 1218.7. TP using Fibonacci, our targets will be at 1261.90. So that's basically the three pairs I'd like to share with you, and that's week analysis. So if you have any questions, or any feedbacks regarding what you want us to share more with you guys, do drop them under the comment section of this video. Okay, other than that, trade according to your plan and manage your risk well. I'll talk to you soon.